Hi everyone. How is everyone doing today? We are on the flip side, and every Monday we host on the flip side. We talk about first Monday of every month, we'll talk about mindset, and every other Monday we will be talking about anything about real estate. And today's topic, we will be talking about private lending. My name is Diana Lizarazo, and today's guest speaker is Murat Kekec. And on the flip side, we'll be talking about anything about real estate, and we'll be answering any questions you have. And so, Kekec, how are you?
Good. Thank you, Diana. Thank you for inviting me here. So it's been a pleasure for me. So
Awesome. So let's get started. Let's start with the borrowers. What should borrowers be looking for in the private lending sector?
yeah. So you wanna find the lender that you can trust with, right? So how do you find those type of lender? You go to the broker that you trust with. So, but there are things that you should be looking. So you want to know what are the terms. Usually in private mortgages, terms are short term, 6 months to 1 year. Most people choose 1 year. And those mortgages either open or close mortgage, meaning let's say that if you want to get a mortgage that you want open and you can close maybe 3 months to 6 months, but you don't know if it's going to take 9 months. So you just get an open mortgage, you close when you can. And some people prefer closed mortgage, and sometimes lender also want the closed mortgage too, because they just want to make some money instead of short-term 3 or 6 months. And there are some fees involved. Every time you do the private mortgage, 95%, or I should say maybe 100%, you will pay lender fees, because the lender will also ask fees on the top of the rates they are asking. Also, there are broker fees too, because the broker is going to help you to find that lender and prepare all the file. So there are other fees also involved when you do the private mortgages. So you will always need legals. You will need two legals. One will represent you and one will represent the lender. So lender will have their own lawyers and you can pick your own lawyer. So that roughly the legal fees, it should be $15 to $2,000 for transaction. And when you pick a lender, you should be looking for prepayment option. So if can you close the mortgage early? If you close the mortgage early before the term, will there be any penalties? So if you break in the penalties, or you have some lump sum of money and you want to pay, let's say that you got a second mortgage, 200,000, and you happen to have $50,000 6 months down the road, and you want to pay back to the lender because you want to pay less at the end of the term. So, and you need to know if the lender is do they have a renewal or not? After 1 year or 6 months of the term that you pick, will they going to renew your term or not? So your intention should always be pay your mortgage in that term, 6 months to a year. If you really need to, but you need to do it, then you need to find out if that lender will allow before you signing the commitment. So maybe your situation will change 1 year from now and you cannot find a lender, or you cannot pay that back loan. You have to renew with that lender.
100% agree. And even in the renewal, what the renewal terms are for fees too.
Yeah, so the renewal fees, usually you're looking at 2%. Some lenders will charge up to 5%. It will show on the commitment. You should always read the commitment before signing it. Take it to the lawyers that you trust and you know it, and make sure you go over everything that I just told you about it. Terms, rate, fees, and prepayment option, all this should be on the commitment clearly.
Mhm. What other kind of fees have you noticed, or even different, unusual fees that you've noticed that there are?
Some lenders, they charge a lot of fees on the lender fees because maybe they are taking risk as second mortgage or the third mortgage. So in private mortgages, you can do first, second, or third mortgages. As you go behind the first or the, like, let's say if you're second lender, your risk is more than the first lender. So you will charge more fees. So if you're third lender, you will charge even higher. Today, I was just talking to my colleague today. He told me that there was a lender that he charged for third mortgage. It was 17% because the risk is high. The lender thinks it's 17%, and the fees 10% because they were third mortgagee. So what else I see? Sometimes the renewal fees are very, very expensive because the lender sees the client cannot pay the loan amount at the end of the term, and they have no options because they cannot go to other lenders, and then the lender will charge more fees. So that's why you need to know your lender well before you go into there. And yeah, and if it is individual or institutional, it's big difference. If it's individual, I find that because they have small money, they might not like to renew it at the end of the term.
I
They
feel
just
like
want their
especially
money.
in these kind of changing market, right? I think this last year that passed, a lot of people were asking, especially on seconds and probably thirds, they were asking for their money back at the end of the term because of so much change that was happening. Were you seeing the same?
Yeah. If it's a small lenders, they want their money back. Definitely, they are scared. But the big lenders, they have no problem. They just renew it, and they want to see the history. They already know the history of the client, right? If they have no problem with the client paying the mortgages on time, they will renew it because they want to keep it. Plus, they don't want to have bad reputation. Like they don't want to have a problem. Like they just want their money back, and they understand the client situation. They just have the client to renew it. That's it.
And any other differences between the individual and in the institution that borrowers or lenders, or yeah, borrowers should know about?
Yeah. So what I found, the institution lender can be cheaper rate. They might have better rates than the individual. What I found with the individuals, since they have small money, they just want to make as much as they can. And sometimes what they do, they even get a line of credit from the bank and they loan that money. So there is cost for them anyway. They are already paying 6-7% or more. So they can lend it 10 or more. So they just make the difference. So those are the differences that I see on the individuals.
And
Also,
so,
yeah, the experience. Some individuals, they don't have the experience, but the big in the institution, they have experiences. You want experiences.
and so what would cause a person to decide between an institution and an individual lender?
We decide, we know, like, so here is this. If you come to the broker, you should give total full story of what you want to do. And you have to provide the full documents that the broker is asking for. Once you provide everything, and then the broker knows who to go to that time. It is not a borrower's decision. The borrower doesn't know who to go to, right? Let's be honest. So, and our job is to help the borrower. And what do we need from the borrower? We need to know everything. So if we don't know everything, then we go to lender, then it is problem because the lender will find the information that client is hiding and they will use against the borrower. So why don't we find out everything up front? So to be honest, this business is all about trust. So always borrower looking for to someone that they can trust. They will get a good rate, good fees, and less renewal fees if they need to. That's what everyone wants. But in return, they have to trust the person. They have to give the full story, and they have to provide it with the documents the broker is asking. Usually it's not too much compared to A lending, B lending. It's just few documents that you need to help. Then you'll get a good rate.
Yeah, that makes sense. And if people are looking for a mortgage broker that works in the private lending side, how do they know, for example, is there any way of telling, or you just have to ask all mortgage brokers if they do private lending? Like, how can you tell if someone has experience in, finding private lenders,
Okay,
like as a mortgage broker?
yeah, private. So you can tell by just asking questions if that broker has any experience or not, if they know the current market rate, fees, and if the borrower has done it before, they understand what to look, what to ask. If they never done it before, and this is going to be first time, you should be going to the brokerage that has a reputation. I'll give an example. My brokerage is one of the top brokerage in Canada. We are the second best in Canada. So that's one thing that you can look for, and ask lots of questions. And to be honest, listen your instinct. So you will know that person you can trust or not. That's it. So same thing when I look for when I'm working with the borrower, I always look if I can trust that person, because think about it, this is business. So you want to make money. The borrower wants to pay as low as possible, and I want to make money in fair. I'm fair and honest, and I expect the same thing from the borrower. So
Yeah, and I think that was a great point that you said, actually, that, if someone's coming to you from, they need money, looking for money, that sharing the whole story and everything involved makes it like that easier for you to find the right lenders for them, for their situation. Because it is true, sometimes people will hide things, and then either, like you said, maybe they hide things, and maybe they know their project, for example, will take longer than 6 months, but they just get a 6-month term and just kind of hope for the best or something, and then, like you said, maybe in the end there's so many fees, and maybe they don't renew them because they didn't tell you the whole story. You may have suggested and said, oh, we should go for a 1 year instead, because we see it probably actually being more of, maybe the renovations are 6 months, but then closing or whatever is going to be another 2-3 months, for example. Right. So understand. Yeah. So I completely agree with you that
yeah,
sharing the full story helps you to find the right product for them.
Yeah, I'll give you an example. Let's say that I seen recent the client had a property that they wanted to refinance the existing first mortgage. The client had a first mortgage from last year, and they came to us to renew, but they are not giving the full information about what is the property is used, if it's owner occupied, rental, and if it's rental, and the more question, who's renting, is it student rental? So those type questions bring more documents or more finding, then we will know who to go to. Let's say if it's a student rental, so the lender may not like it. Some lenders, they don't like the student rental. So, but if we know upfront it is a student rental, we should go to the lender that does student rentals. I seen a deal that we didn't know, and the lender finds out this because they can do the due diligence too, and the client hides the information, so they can find it, and then the rate will increase once they find it.
Yeah, so, or even they could reject them maybe too.
Of course, yeah. Because you didn't share that information, and you need that it is important information. And now you just broke the trust, to be honest. Yeah.
Exactly. You lose credibility as the borrower.
Yes. So, and one thing that I wanted to talk about too. So, borrower always looking for, from their perspective, they just want to get this, they want to get the best rate, best fees, and as quick as possible. What about the lenders? They always want something too. Obviously, they want to make money. No one cares about, they don't want their property, your property. They just want to make sure that you are trustworthy. So, and plus their time is valuable. To be honest, everyone is looking for money, and the lenders are never short of finding borrowers. There are lots of borrowers. They are the one that making decision. It is their money. Therefore, the borrower always should put their shoes into lenders' shoes. So therefore, they ask documents. Few documents, to be honest, like, if you wanna, let's say that you wanna refinance the property, what is the first thing the lender will always look? Appraisal. And that appraisal should be last 30 days, not like from last year. So as you know, the market shifted, price dropped, so they are not going to accept the old one. They will ask you your credit report. They want to see your character. They want to see if you miss any payments, and they want to understand the full story, not just your credit score. Because the habits, we are creatures of habits, right? This is what they want to see. So they want to see the credit report, they want to see the appraisal, they want to get an application to understand what's your income. And can you come up with any documentation that prove your income? You're self-employed, okay, we understand lots of people don't show on NOA, but you can prove if you're making hundreds of $1,000s, there are ways to prove that you're making that kind of money. Showing some bank statements that you're receiving some money, and you can be able to pay that private mortgage payments monthly. So I like to talk about the numbers. If I can give one example, let's say you were going to buy a property with $1 million now, and you have to have at least 25-30% down payment. Less than 20 is risky. 20 is very, very tight. 25-30 is ideal, because lenders wants to see you have at least this much equity, the down payment. So now you have $700,000 mortgage, and typical first mortgages now 9-10%. Let's say 10% to make the numbers easy. So now 10% of 700,000, $70,000 total interest that you will be paying in a year. So that if you keep that mortgage in 1 year, this will be your cost. But let's say if it's construction, you want to do some renovation and sell it, sooner that you finish and sell it, it will be less for you. So if it's 6 months, you're looking at 35,000. Can you able to pay this in monthly? So $70,000 of mortgage will come to 6-7. How much is it? Over 6,000 per month
for 70?
Yeah.
Yeah, probably around there. That sounds about right.
Yeah. So can the borrower able to pay this $6,000 plus all the expenses in their life, right? So they should able to pay this. And after the term ends, they want to see the exit strategy. This is the most important. The lender want their money back. They don't want your property. That's it. So no one wants your property unless they are really, really bad lender. There are some lenders, or I should not say they are bad lenders, or because sometimes that's what the client situation. They don't want to sell the property. Sometimes client, they just keep asking for equity, getting more, and they have no equities, maybe over than 90%. Most likely, these people is going to sell the property. Therefore, some lenders, they don't mind lending on over than 80%. So the lenders, they just want to make sure they will get their money back after a year. So again, you have to give everything. My suggestion, so don't give little bit of information, give everything to the broker and take your time. Like, so if you know that your mortgage renewal is coming, go talk to broker maybe 2 months, 3 months before. You know, don't wait till last minute. So because time is important, use that time. Work with the broker, see where are you strong, where you need help, and then broker can help you to get a mortgage in, let's say, month, 2 months from now.
And so when let's say a lender's coming to you and they have no experience in lending their money out, what do you recommend for them to, either you sharing information or them to know? Because I know, for example, even the type of lending that they want to do is probably something that you'd want to talk about with them so that they understand the risk levels, right?
Yeah. To be honest, I haven't worked with the lender that who hasn't done it before. So all my lenders, they have experiences, they have done it multiple times, most of them big lenders, some small lenders that I work with. So those are what I know, but obviously the lenders is their own money. They have to do the due diligence always. They have to learn more about these finances, what to look in that person. There are so many things that you can learn. You need to learn about the person income. You need to learn about the area. So I haven't worked with the, so I have, since I haven't
Work
worked
with institutions or like that, lend people that are individual but have already had already have experience.
Yes, yeah. My lenders are very experienced. They know what to look. That's why I learned so much from my lenders. Every lender points something. So when I send the file, so they know what to look because it's their money or it is their investor money. They want to protect their money, which understandable. That's why we have to make sure that also the borrower can do this. There are lots of fraud happening in the private too, to be honest. So that's why when you send the file to the private lender, they search a lot of information and they can find so much information about the borrower. Don't forget, we are in information business. Most people don't understand what the mortgage broker do or can do. We can find so much information about the clients. We know so many lenders. We know so many borrowers. When the borrower comes to us, maybe I seen this name or heard their name from someone else.
And you know what's a great point that you've said that I just want to highlight again is that the lenders need to be the fiduciaries of their own money, which I think is very important. And not, like you said, you know, like being able to check everything out and understanding where your money is going and how it's doing. And that being said, do you want to talk about a little bit about like what like first, third, and fourth mortgages are, the risk levels, and even promissory notes, just so people have an idea of it?
Pardon. So what are the risk of the second, third, and the promissory notes? So I see. So promissory notes are not tied to the property. So it is, if the borrower doesn't pay, so there's huge risk, and we don't do it. The lender, they always want to get a title on the property because they want to make sure that they will get their money. If the promissory note, there is no guarantee that you will get that money. But with the mortgage you have on title, the lender, if the lender will not get their money back in 45 to 55 days, they can start the power of sale to get the property, to get their money, right? So the second mortgage, big risks. Third mortgage is bigger risk than second. So if there is a power of sale, who will get the money first? The first is CRA. If any money they're owed to the government is going to take the first. And if any money that owed to the city is going to take. And then the third one is going to be first lender, and then second lender, then third lender. So if as you are behind the more lenders, so there will be maybe less money to get, right? So therefore, the lenders, they want to avoid this. They don't want to go to power of sale. They do the diligence. They want to make sure this will not go to power of sale. And I asked many lenders how many power of sales they see, and if the client is in difficult situation, what do you do? So I have seen only one power of sale from one lender in their portfolio. That specific lender has over than 300 mortgages, 300 to 500 mortgages, and only one power of sale. So, and they try to work with the borrower to keep this, but borrower decided they want to sell it. So from the other lenders, I haven't seen any power of sales. And if the client is in situation, they want to work it out. They want to just keep it, like, they want to make sure, like, okay, how can we do this together so you won't go to power of sale?
Yeah, that's a great point. And actually, do you work with private lending with, like, let's say flippers or like people that are investors only, or have you worked in private lending also in the, like, just the residential side where they're not investors?
I work with both residential and investors. So if it's investor, so then you need to understand they know what they are doing. They have done it before. They understand their budget, because this all have to make sense to the lender, because the lender will go through the numbers that this type of client, the borrower, wants to do. They will go over the numbers, make sure that they get some quote from the contractors. So they want to make sure that they understand the numbers and they understand the exit. Most likely they want to fix it up and sell it. And if they sell it, they want to know if there will be some profit made, and they will do their own due diligence. And I have done it. Yeah.
Okay, because I was just curious, because like that, how you're saying that although this power of sale was specifically, it sounds like it was an investor who was having to go through a power of sale, right?
Yeah.
And so did you get to see how that process went? Like, it actually went all the way to court, or they just went to, like, the demand letter and then put it up to sale?
Yeah, demand letter, and they try to work it out. So I don't know the whole details because it's between the legals. So they try to negotiate and keep everything together. So I have no idea about the details, but the process is not that easy, and it will take, the first notice is sent after 35 days if the client cannot pay it. So, and what do they call it? There is a name for that.
After the demand letter?
Statement, yeah. So they send a notice of sale to borrower. Yeah.
Oh, the notice of sale to borrower, yeah.
Yes.
Right.
35 days, and after 35 days, and it's still they cannot do it. 20 days after 35 days, they can start the process. So yeah, you're looking at 45 to 55 days, but they try to, give time to borrower if they can come up with the fund or not.
Yeah, and the point that I just wanted to get at was that usually, at least with investors, you're not that tied to the property. So you're willing to, like that, create a solution quicker and figure out things quicker. And like that, if it's like, okay, selling it, then they sell it, or whatever they need to do to just find a resolution. Whereas this is why I personally like lending to real estate investors, because like you said, it's a business for them, right? And
Yes.
so so they will treat the property differently than, for example, a homeowner who's on the private, who has a private mortgage. They would think of it differently, because especially if they have family there, they may have memories and ties to it. And then they will still try to work at obviously getting the solution done. But I feel like they will take a lot longer. And if anything, it could go to a worse situation than, let's say, an investor would.
Yes. Also, what I found with the investor, they are more educated. That help us. Like we want to work with the people that education, they understand. When you are educated, you understand the numbers. This is all about the numbers. It has to make sense. The lender wants to work with you, they want to lend money, right? They just want to make that profit, the rate of return. That's it. So, and your number has to make sense. That's it. And they want to see how well you prepare all this file. That's why when you work with the broker, one thing that I find works really well with us, if I have full story from the client and the client trusts me fully and I trust my client fully, and then I get full story, then go to the lender, works better than I have some information about the borrower. Because again, this will create a problem. But the investors, especially, they know what to provide, what to give, and they are willing to do this. They understand this is all cost of the business. They are in this to make money, same as the lender. Same thing. They are all using the real estate. Yeah.
Amazing. Yeah, that's true. And you were talking about fraud. So it would probably be good again to know on both sides, like how can that happen and what should be the indicators to watch out for, to just make sure that as the lender, is it only happen, because I actually didn't know about this. So is it the lenders need to watch out from the borrowers that they're doing fraud, or the other way?
Yes.
Or even does it
Yes.
work
Yes.
on the other side? Like, can the borrower have to watch out if the lender does some kind of fraud? No, probably just one way, right?
Yes. From what I see, because the lender is giving money, they just want to make sure they are lending on the right person. They will get their money back. So the fraud happens. So there is a big demand on the private money. And I work with lots of brokers that like me, but they send me the deals because they know that I have lots of private lenders. But one thing that some borrowers, some brokers, they don't give enough information. They are hiding this information from the lender. So that information will cost lender money. So we want to protect the lender as much as we want to protect the borrower. We don't want anyone to lose money, and therefore we need some sort of document. Sometimes when we ask the documents, either the borrower or the broker don't provide this document, then we know. Because if someone is serious, let's be honest, someone is serious and they are looking for a financing, and then what is the point of not providing documents, that reasonable documents? They are not asking everything and which makes sense. This private mortgage is all about, it has to make sense. That's it. So it doesn't make sense, no one is going to write a check. We're talking about hundreds, sometimes millions of dollars.
And so what would say, what was the worst case that you've dealt with for fraud? Just to give people an example of what to watch out for, I guess.
So because they are borrower, we have to watch out. So
Yeah.
I have to, so that's why I have to 100% believe in the person that I work with. So when I have to watch out the information they are giving me, or information they are not, they don't want to give it to me. So I always look for to get more information, and my borrower should give me that information. So then I will do, I know who to go to. So the worst thing that I seen, so because we detected that it was going to be fraud, we knew that that borrower intention was not going to pay the mortgage, all this, we stopped. So I'll give an example. I went to the lender, was going to issued the commitment. It was a big mortgage, and the borrower looked very ideal. Even you can Google the name. I never forget. When you Google the name, you'll be impressed. In this and that, you think that this is perfect borrower. And I found information about the borrower from someone else, and then I stopped the deal. I called my lender, don't lend it because of the new information, because I care about my lender, because I want to protect their money. So we have to always watch out. We have to always watch out. And if the borrower is honest, there is nothing to be scared of. So we want this type of people. We want the person. So if you think that you're an honest person and you're looking to get a mortgage, and give that all the information that person that you trust with, and give 1 to 3 days. Let's say if you decide to work with me, I want full story. Give me 1 to 3 days. I'll get back to you with the commitment, and everything will be on paper. So that's it. No.
So with this specific case, you actually didn't even get to the point of collecting the information yet?
I had the information. We were going to issue the my lender was, they like the borrower. They wanted to lend the money, but once we find more information about, and then we called them, we said, you should not, because that borrower intention wasn't good. So yeah.
And but in that case, though, you didn't even see it in the paperwork. It was actually, or was it you did find the right paperwork, or was it from other like mortgage brokers or something?
From the other lenders, because again,
other lenders.
We have lots of connection with the lenders, and then we found more information about, because we talk, we know, and the information always shared. Yeah, or yeah, we can access the information. Let me put this. Yeah. Then I stopped.
I guess that's also then one of the risks of private lending, because it doesn't generally get put in the credit report and stuff. So sometimes those kind of things are hard to notice that there are problems, I guess, because it doesn't go into the credit report sometimes. I know some big institutions will put it in, but smallers or individuals won't. So then in that case, it becomes more of a word of mouth of letting people know, if someone didn't make their payments or what has happened in the past.
Let me just plug this. Hold on a second.
No problem. So yeah, so that's very interesting. That is actually good to know that, because that is one of the things that if you're lending out your money, I know that A and B lenders specifically, they usually do it all the time. They will put it in the credit report and they show when people are making payments. But on the private side, it's not as common to see that. And especially if you as an individual, you never do that. I don't know, probably because it costs a lot, but you don't do it. So these kind of things, I guess the person probably wasn't planning to make the payments or something, and like that, you don't see it because it's not being registered in the credit report. So then these kind of situations become more of a word of mouth type of thing, like you said, because you have a good big community of lenders, you're able yourself to, like that, just get information from your communities to see their credibility.
Yeah, of course, you have to help the lenders help each other. So they are in together, and everyone wants to protect their money, and they have relationship with this to keep their money. So, and very, very, they can access to so much information. The borrower thinks that they can hide, but they know. Once they find out, they just reject it. That's why it's better to, maybe sometimes small information they are hiding and it's not a fraud. So why don't you say it up front? You should better say everything from the beginning. And maybe you should not even get a private mortgage too. Sometimes I seen clients, yesterday I had a client, potential client. He was keep calling me and to get a second mortgage. I rejected him, even though he was eligible, he could get what he asked for. but he was not right fit. So some agents, they don't care, they might do it, but I look at all the financials. I can get him a mortgage, but I didn't see the exit strategy well, so I didn't believe in. I told him you should not get it. Sometimes we should tell client that they can't or they should not get a
Yeah.
private mortgage. Yeah.
It's even good for them as a borrower, right? Because imagine like that, especially with new investors, they'll get into projects and like that, they don't have that full big vision. And they think, for example, like, oh, I should have enough to get it done, but do they have sufficient to exit for? And it's like, do you have multiple exits? You know, what if you're flipping, but you can't sell? Can you handle it then? Or what's the plan afterwards? And if there is no plan, or if there isn't sufficient money, because a lot of people like to, you know, cut corners to reduce the amount of money. But the thing is, fine, you want to cut the corners, but you still have to have a lot of money for just in case things like that. Things take longer, or run it fine. You decide to do like the minimum amount of renovations, but you still have to have a lot more money for just in case you open up a wall and see something you didn't want to see, you know?
Yes, yeah.
Yeah,
You
so
should
I
be
think if
safe.
anything, it's good to sometimes get those rejections because for new investors, because if anything, you're letting them know they're not qualifying because of, like you said, in that situation, I don't see how you're going to exit. You know, maybe whatever, maybe you didn't have enough funds and it's not going to happen, you know? Or it could have
Yeah.
been like that, like why not go to an A or B lender because it's not worth the money. Like I know, for example, a lot of people doing BRRRRs, it's kind of not really worth the money to go to private and then go to an A or B lender right now, just because you're not getting as good as an appraisal as we were before. So it's like, why go to a private lender? Just go straight to those A, B lenders and wait the year or two instead to do the refinance.
Yeah. So yeah, so this private mortgage is very, very interesting. Every day I learn something new about the private mortgages.
Mhm.
And as you see, because every file is different, every exit could be very, very different, very challenging. More information you know about the client, asset, the property, income, and then the broker job to use this information. That's why we keep asking this information. If we are asking this information, there is something behind. If
Mhm.
this will help the borrower, also it is against the borrower. But if it's against the borrower, then again, they should not get the mortgage. Or this way they get financially educated. They learn something. Oh, I never thought about this. I'll give an example. Last week I met someone that who purchased cottage. I can't remember the area, but he found a 50% private mortgage. And I asked him, where are you going to get the 50%? Do you have 50% down payment? He says, no. And I said, okay, where are you going to get the second 50? Another private mortgage. So it doesn't make sense. I said, why would any lender will lend you another 50%? Plus there is a renovation cost that he told me. So basically this borrower has no money, and they want to get the 50% from one lender, 50 from the other, plus the renovation cost. I said, it doesn't make sense. No one is going to do it because
Mhm.
that person, they are taking the risk.
Yeah.
Yeah.
Yeah. And that just shows like that they're a new investor because, you know, like it gets advertised a lot, like, you know, you can invest with no money, but I don't think people realize the actual definition of no money because it's not actually no money. And so it is, people put themselves in such risky situations. And like you said, it's like you come in and tell them the reality of things and make them realize what it is that they're doing, you know, and you hope that they learn from it, right? You hope that, okay, let me go strategize and figure out how to do this. Hopefully they don't just go to another, because there are people like that where like, oh, if you can't do it for me, I'll look for someone else who can. But really they themselves are putting themselves in a bad
Exactly.
situation and they don't realize it. So Yeah, that's a good example.
Yeah, if the other broker can do 100% financing, that doesn't mean that they are doing good to you.
Mm-hmm.
So you purchase something that you have no payments, no down payment, plus you're going to spend maybe 6 months. How are you going to pay that 6 months too? Do you have any money? No. Maybe you have some money to pay that 6 months interest rate payments, but you have no equity,
Mm-hmm.
nothing. And how are you going to pay that this and the exit has to make sense. You have to get it like so much under the market value and all this renovation, all these costs, because 100% financing, you have to
Yeah,
make some profit. And it's very,
exactly.
very, I don't think it's doable.
No, it's not. Especially right now, it's not even worse doable. Like if yeah, it's even worse now. Actually, I can tell you, for example, for me, I was able to get 100% financing actually on one of my houses, but that was because it was so we got it undervalued so much that they were willing to go up to 100.
Mhm.
And but like, and that was in a good market. That was in the good market when things were good. Like now it's hard to find even those kind of things because people right now, I mean, prices have already dropped a lot, and then asking sellers to drop it down even more. At least I'm personally having a hard time finding properties because, like you said, you go and buy a house, like we have closing costs, we have holding costs, we have renovation costs, and then like in general, I personally like to do the flip one. So again, I'm closing, right? So it's like we're dealing with all those expenses, and then we have to bring down the value enough to be able to also include some profit because obviously we're running a business here.
Yeah.
And it's just like people don't realize how expensive it, and then like that, if you're doing it with private money, even more expensive. It's like all these things add up and people don't realize, and they think, oh, it's okay, uh I don't know how they manage to think that they can do it, but
Yeah.
but it's good to sometimes get those rejections for people to understand that either these aren't the times to do those kind of risky deals. Because I mean, I've done actually like none of my money in, but that's because I had really good deals and I had like I could actually support that kind of like money and stuff.
Mhm.
But for new investors, definitely don't do that right now. And
Yeah.
actually, that's what we tell a lot of people right now. Right now, we're in an environment where you have to be very cash heavy right now. Be very, very cash heavy because you have to be very ready for anything to happen because we're such in a market that is just like we still don't know. Some people still think interest rates are going to go up. Some think they're going to think is going to stabilize. Some think are going down, and it's just like you have to, we're in such a market that it's up and down. Like I mean, emotionally, everyone's up and down, that we don't know what the reality is going to be in the next few months. And so, like that, right now is not the time to be getting everything loaned out. This is not the time for it. And it comes with experience, right? Experienced investors can do something like that. If it's a new investor, you got to go the traditional route and get used to those types of things, going with A and B lenders, understanding what those expenses are. Same thing, because at least in those situations, you have time to figure it out. When
Mhm.
you're in private side, interest rates are so much that you can easily, like 1 or 2 months, like you were saying before, right? If you're paying 6,000 a month for just your mortgage and maybe an extra 1,000 for the rest of the utilities, that's, imagine trying to carry that, because we did that actually.
Yeah.
We had another flip that we were doing. It was around 8,000 a month that we were having to carry the cost because it was a big project we were working on. And like people don't think about all the other things, that have to be involved in it. So I think it's
Yeah.
like that was great information that you provided. Any final words that you want to share to the viewers about either yourself or like the final tip and some extra like contact information if they want to reach out to you?
If they want to reach out to me, please send my information to them. So this business is all about trust. You want to work and you want to, this is all business. Everyone wants to make money. Please trust your broker and give all the information your broker is asking. In return, you tell your broker, tell your lender, you want quick response and quick commitment in, let's say, 1 to 3 days is very reasonable. Give all the information, not just some. Give everything. You should give everything. Very important.
Yeah, completely agree. Thanks so much for coming on. It was so great to have you on and for you to share your information. If you guys love what you heard from Murat, he's going to be tagged on this video, so you'll definitely be able to reach out to him. Send him a DM if you have any questions or if you need any help with private financing. And if you loved what we were talked about, send us some comments. Let us know any questions you have. Feel free to add some comments. Send us a like if you really liked it. And we'll see you all in the next episode. Murat, thank you so much for coming on. Thanks everyone for attending.
Thanks everyone. Thank you, Diana. Bye.
Bye.